Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, we're going to title this one, Things You Don't See in a Recession. We continue to hear the concerns and worries, and there are some cracks. There are some cracks starting to show, but we still just simply don't see recession anytime soon, and even into 2024 is our base case. And so I'll just kind of start it like this. I want to hear you go the macro route. I'll just go the stock market route. The time we're recording this, the S&P is up like 20% for the year. The Dow is a chip shot from an all-time high. And Sonu, are you ready for this? If you include dividends, the Dow is at an all-time high.
Wow.
Spoiler alert, the stock market tends to lead the economy. Now, this is on the upside and downside. Believe me, there have been a lot of times the stock market rolls over and the data is good. Everybody's like, what's going on? Oh, well, that was coming. We think there's a very good chance that the stock market hitting new all-time highs with some things that we're going to talk about next, pure economic things. But the stock market leads, potentially making new all-time highs, right at all-time highs in a lot of cases. With the strength we've seen, Sonu, I think it's just another sign that, you know what, the economy might surprise to the upside next year. And with that, probably means we're not going to have a recession. Sonu, what are a couple things you've noticed on your radar that are things you simply don't see in a recession?
I think I have more than a couple. No.
Yeah.
Look, I'll pick one which is not talked about, and we started talking about it all the way back in March when people are worried about the Silicon Valley Bank crisis and whether we are going, the odds of a recession were higher and all of that, right? You look at factories. Factories are coming back to America. Reshoring, nearshoring,
Yes.
nearshoring, reshoring. Really, it's coming back to America, right? You look at manufacturing, construction. So this is construction of factories and plants and things like that. That's up, Ryan, 102% from the end of 2020. That means over the last 3 years minus 2 months, because this is through October, 102%. And this is after adjusting for inflation, by the way. And that's all coming. A lot of it is coming on the back of semiconductor plants being, put together. I think there's one close to your neck of the woods in Ohio, in Columbus.
Yes.
Maybe
Yes.
where Intel's putting one.
Huge one.
Tons of electric vehicle battery plants. That stuff is up 914%. That's like a .com chart. It's my chart of the year. 914% since over the last, 2 years and 10 months, right? It's an incredible increase in construction, non-residential construction here in the US. Then you take the other side, residential construction, right? Last year, I think the Fed basically broke the housing market, crashed the housing market. Not a surprise if interest rates or mortgage rates go from 3% to 8%. Well, at the same time, there's a lot of construction. You look at single-family units, multifamily units, total construction of all that stuff is running close to record highs. We've never seen more construction than in that area since, like ever. Right. So I think that's something,
Since ever, that's a long time.
Caught myself there. But that's something you don't see in a recession.
Well said. Also, we've talked before about the strength of the consumer. Why we look at things like consumption. Consumption is still running above trend from pre-pandemic levels. Keep this very high level and simple. If you look at balance sheets, right, assets and liabilities. Liabilities like debt. Yeah, there's some more debt going on out there. We've heard about the credit card debt, different areas of debt. Here's the other thing that they don't tell you on TV, Sonu. The assets part of that balance sheet are near all-time highs, right? Stocks have done well, houses have done well in a lot of ways. And I know this is somewhat controversial to some people, but it's just the data. In a lot of ways, balance sheets on households here in the U.S. are some of the best levels they've ever been, and balance sheets on corporate America, who locked in a lot of debt at really low interest rates a couple of years ago and now is making 4 or 5% on their cash. Balance sheets on corporate America also are really strong. So, no, we're probably at about the end. Any final comment on things you don't see in a recession?
Inflation's going lower, right? Layoffs are really low in the economy. That means the labor market is healthy. That means incomes are growing. And after accounting for inflation, incomes are growing really strong, close to 2.5%, 3%. That's driving consumption. That's good for the economy, which means it's good for stocks as well. It's good for profits.
Yeah. Amen. Well said there. So again, we have not seen a recession in 2023. We came out this year saying we didn't see a recession. There are some cracks that are starting to show. We're not naive to those, but again, just overall, we think the underlying fundamentals and base is what I'm trying to say. The base of this economy is still on really, really firm footing. And these were some things you simply don't see in a recession. Oh, by the way, one final one, Sonu, one final one. TSA, we had 2.9 million people going through airports the Sunday after Thanksgiving, an all-time record. And by the way, thanks to all the airlines, 90% of the flights were actually on time, which is amazing when you had a record 2.9 million people fly. That's another thing you usually will not see in a recession. So with all that, this is the latest Carson's Take 5. We'll see you right next time. Thank you.